This is Horizons Middle East and Africa. Our top stories this morning. President Trump doubles down on his tariff regime, now threatening new levies on imports of pharmaceuticals and copper, sparking turmoil in the metals market. OPEC leaders are set to meet today after that surprise production hike of more than 500,000 barrels a day. We are live in Vienna. And later on in the show, we take a deep dive into the UAE's ambitions in Africa as it expands its influence and power across the continent. It's just gone 8 a.m. across the Emirates, midday here in Hong Kong. I'm Yvonne Mann, in for Jumana Bashechi here this morning. Take a look across markets and what the price action is looking like here today. It's pretty slow going, right? U.S. futures are slightly under pressure. You have this new threat from President Trump and that headline risk of them and his saying, vowing to keep that August 1st deadline when it comes to tariffs. In terms of the equity space, we're seeing a little bit of wobbles here in Asia, but certainly it's been pretty resilient so far here today. I believe China really is the only one that's bucking the trend here, and lower. The rest of Asia is doing actually decently okay. The global bond sell-off continues a little bit here. Take a look at how treasuries are doing. That 10-year yield is up about 1 basis point. So we're talking about a 6th straight day where yields have ticked up higher in the treasury market. There's a lot of lingering concerns about fiscal deficits. The 30-year JGB was certainly seeing a lot of movement there yesterday as well. But yes, right now we're seeing very closely what the dollar moves are also. With that Kiwi dollar, we saw a little bit of whiplash there after that RBNZ kept rates unchanged as expected, but leaning a little bit more dovish, saying that this was just a pause this time. That's hold. But they are leaning to more rate cuts in the future. Flip the boards here are watching very much what we've been seeing when it comes to copper. So that certainly was the new one, right? When the copper market was expecting maybe lower tariffs, now we're talking about possibly 50%. So that's why you are seeing when it comes to COMEX futures, that's the one to watch, right? We saw the biggest one-day spike on record and briefly touched all-time highs for COMEX futures there. On the flip side, though, LME, that heads to the opposite direction. So that spread between U.S. and U.K. futures are actually continuing to widen here this morning. The expectation is if tariffs are going to be higher, maybe less supply heading into the U.S. Maybe that's why we're going to see higher prices moving forward. You're watching some of the copper movers and miners there. Sandfire Resources are down about 3.5% here in Australia. Also, when it comes to the pharma side of things, Trump threatening 200% tariffs on the pharma space as well. We did see a bit of movement and whipsaw in some of these pharma stocks here in the Asia region here this morning. Let's get to our top story now. President Trump is pushing forward with his aggressive tariff regime and stressing he will not offer additional extensions on country-specific levies set to now hit in early August. He's also indicating he could announce substantial new tariffs on imports of copper and pharmaceuticals.
I believe the tariff on copper, we're going to make it 50%. We'll be announcing something very soon on pharmaceuticals. We're going to give people about a year and a half to come in, and after that they're going to be tariffed if they have to bring the pharmaceuticals into the country, the drugs and other things into the country. They're going to be tariffed at a very, very high rate, like 200%.
Bloomberg's John Harney joins us now for more. And John, was this a surprise in any way to the market? And what do you think it means when it comes to copper prices moving forward?
Trump's comments certainly generated turmoil in the metals markets. But with all the zigs and zags and zags and zigs of trade and tariff policies, announcements, reversals since January, the markets were at least somewhat prepared. Now, since February, traders have been sending large amounts, huge amounts of copper into the United States. And this was after, in February, Trump asked the Commerce Department to look into tariffs on national security grounds. Now, at the same time, however, the prices of copper kept going up. And now, with this apparent announcement, with this tariff that could be imposed perhaps within days, these time of preparation are over, and the markets will have to see what's next. Now, of course, as we've seen with many other Trump announcements, initiatives, all this could change.
Yeah, all this could change, but certainly what doesn't change is where copper demand is, whether you're talking about data centers, the EV batteries or EV automakers and the like, that certainly do need the metal. I mean, in terms of industries, which ones are likely to be affected?
Well, as you said, the power companies, automobile manufacturers, anyone really who wants to incorporate renewable energy into their products are going to require a lot more copper. One other thing that should be pointed out is that this policy perhaps presents another paradox or dilemma in Trump's agenda. The Trump administration has made it, and President Trump himself has long made clear that trade deficits are something to be avoided, something to be combated. At the same time, though, higher copper prices may well deter investors in manufacturing and building new factories, and that could hinder or delay a manufacturing revival he also promised during the 2024 campaign.
John, thank you so much for staying late for us. I know it's getting pretty late over there. John Harney there with the latest on, of course, the headlines that we're seeing when it comes to trade. And for more on how markets are moving, let's bring in Christopher Smart, managing partner and founder at Arbroath Group. He joins us now. Christopher, it's always great to have you on the program. You had a report out yesterday talking about Taco Tuesday. We're heading into Wednesday now, and it seems like you have a bit of a, I guess, turnaround from the president saying that August 1st deadline is firm, no extensions. Can the taco trade still live on?
Well, it seems to be living on, and it's good to be with you, Yvonne. I think, what we're hearing from markets and what we're seeing in price action right now is that, markets are a little bit, sort of pausing from the record highs they reached a few days ago. But there's certainly not anything like pricing in 20, 30% tariffs on all trade with Japan or South Korea. Nothing like 50% tariffs on copper. As John pointed out just now, copper is in everything. It is literally the price that you look to as an investor to sort of gauge the strength of global demand. And putting a big tariff on that really does flow through the economy in very dangerous ways going forward. So I think there is, at least from the market's point of view, none of this stuff is really going to happen right now. From the clients that I talk to, corporations that are trying to decide where to build their next factory, there is no less uncertainty than there was when the president was first elected, when he first took office, and certainly not much less than when he announced these massive tariffs on Liberation Day.
So what are these tariffs trying to achieve? It seems like they're trying to, try to do it multiple fronts, right? Trying to achieve, I guess, a way to reduce income taxes. You want to encourage foreign capital. Is it really about, reducing the deficit, the trade deficits? Is it really about, in some ways, national security? I mean, it seems like they're trying to solve multiple problems with just tariffs alone. What can it actually achieve?
Well, I think the answer to all of your questions is yes. The president believes that tariffs are a very important lever that can be used on a variety of different fronts. And he's had some small successes here and there, depending on how he's applied them and what he is targeted. I think tariff threats on Mexico have been helpful in terms of encouraging Mexican cooperation on border control. They were clearly helpful in getting the Canadian government to back down on its digital taxes. But forcing the European Union to restructure its auto industry or forcing Korea to change fundamentally the way it does industrial policy, those things don't change overnight. Nor is it automatic that you choose to build your factory in the United States because of a tariff. There are a whole lot of other things that go into that, again, as John pointed out, including the cost of labor, the cost of infrastructure, the training. All of those sorts of things go into the balance of how a company decides to make those decisions. So again, the president, unfortunately, I think has introduced a lot more uncertainty in those decisions that may delay them and may be a significant headwind to the U.S. economy towards the end of this year.
And Christopher, you're still seeing the likes of Goldman, Bank of America revising their year-end targets for the S&P 500, thinking that there's still a case to be bullish in U.S. stocks. How do you pitch that to clients right now, this whole theme of U.S. exceptionalism, when there is so much instability around tariffs at the moment?
Well, I think it goes back to your first question around the taco trade. I mean, that was a tongue-in-cheek acronym about the president and how he always backs off of these threats. And I think the market right now is really believing that this is part of his negotiating strategy. Nobody really believes there will be 50% tariffs on copper or 200% tariffs on pharmaceuticals or whatever he's threatened for Japan and Korea. There is a sense that tariffs will be here. I think it's important for everybody to understand that tariffs are here to stay more likely than not, regardless of who is the president's successor in 3 years' time. They'll become an important source of revenue. There'll be a lot of lobbying groups that are lined up to preserve whatever tariffs stick. But nobody believes that they will be at the levels that he has threatened right now. And that, I think, is why you have targets being revised upward a little bit, and the market's so optimistic at this stage.
How do you see money, funds, where they go, depending on where tariff levels are? Is it that you think capital could head to countries that have lower tariffs versus higher tariffs? Or is it more broad-based, that in some ways that it weakens the dollar and EM in some ways benefits?
I think it's going to be 1,000 different answers depending on the structure of the sector, the way the tariff is applied, the decisions that different companies make. And it will, because companies have lots of different products, it will hit each of those products differently. So I don't think you can sort of say this is really great for America. I don't think you can say it's really terrible for America. It's going to depend on analysis, company by company, industry by industry, and frankly, tariff by tariff.
Christopher, we'll leave it there. Christopher Smart there, managing partner and founder at Arbroath Group, joining us. And coming up, U.S. Secretary of State Marco Rubio is making his first trip to Asia as President Trump threatens to slam the region with high tariffs. We're going to cross live to Kuala Lumpur next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Yvonne Mann in Hong Kong. Well, U.S. Secretary of State Marco Rubio is heading to Malaysia for an ASEAN meeting with China's Foreign Minister Wang Yi also set to attend. Now, Rubio's trip comes as President Trump threatens new tariff rates on several countries in Asia unless deals are done by August 1st. Let's get to our correspondent, Min Min Lo, joins us live from Kuala Lumpur. Tell us what's on the agenda for the next few days.
Yes, of course, the foreign ministers meeting typically is a time to discuss geopolitics, right? But and so the top of mind for Asian leaders is usually the South China Sea dispute with China, the Myanmar political conflict there. This time, an eye on the Middle East as well. Malaysia hosting this Palestinian redevelopment session as well. But of course, it's being overshadowed by Trump's tariffs. Marco Rubio, as you said, coming to Asia for the first time in his capacity as Secretary of State. Wang Yi is here as well. So both countries will be vying for influence in this region. And these Southeast Asian countries in particular, they are very badly hit by those tariffs. You look at the table there on your screens. About 40% tariffs for countries like Laos and Myanmar, over 30% for Indonesia, Thailand, 25% for Malaysia. So these countries will still want to keep negotiations going with the United States. And ASEAN countries have been advocating for coming together as a united front so that they can leverage their collective strength, right? 700 million people, a $3.8 trillion economy. But that unity is really being tested by President Trump setting individual levels of tariffs on these different countries. How are they going to come together to increase their bargaining power with the U.S. while also not angering China at the same time as well?
Yeah, transshipment is certainly one thing that we've seen in some of these trade deals with the U.S. and Vietnam, for example, in some ways to try to counter the flow of goods from China to the likes of Southeast Asia. How do you see these ASEAN nations dealing with these kind of crosswinds between the U.S. and China now?
Yeah, so they are in a very difficult position because many of these countries are export-oriented countries. They do have quite a significant trade surplus with the United States as a bloc, but still, China is still the most important trading partner, about $980 billion in trade volume between ASEAN and China, which is still more than double the amount of trade between US and ASEAN. So they'll have to figure out how to navigate that. Of course, there are a lot of details as to how the transshipments are going to be enforced and what exactly counts as transshipped goods, given that a lot of products these days contains parts from many different countries. Not to mention, you have Marco Rubio and Wang Yi at the same place at the same time. Will they be having a bilateral meeting at the sidelines? That's something we're watching for as well. The Chinese Foreign Ministry had said they have no information to offer. But remember, those two men had a chance to sit down at the sidelines of the UN Security Council meeting in February this year, but they did not use that opportunity. Will they be meeting this time, perhaps to discuss a potential trip by Trump to China? That's something we want to keep an eye out for as well.
Min Lo, our correspondent there, joining us live from the ASEAN ministers meeting there in Kuala Lumpur. And now for a look at some other stories that we're following. U.S. President Trump met with Israel Prime Minister Benjamin Netanyahu for a second time in the White House on Tuesday evening. The meeting was meant to discuss the possibility of a ceasefire in Gaza following a U.S. proposal to temporarily halt the fighting. Meanwhile, Axios is reporting a Qatari delegation has arrived in Washington for truce talks. Emmanuel Macron has urged the UK to recognize the state of Palestine in a speech to the British Parliament. The French president emphasized the need for cooperation amid Middle East tensions. Macron's trip marks the first state visit by a European leader to the UK since Brexit. And coming up, India's Prime Minister is set to wrap up a 5-nation world tour in Namibia. Now more on Narendra Modi's aspirations for leadership in the global south. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Yvonne Mann in Hong Kong. And Indian Prime Minister Narendra Modi is on a state visit to Namibia, the final stop of a 5-nation global tour. Modi will hold talks with his counterpart and is expected to address a joint session of the Namibian parliament. For more, let's bring in Andiro Nganga joining us now with a preview. So he's heading to Ghana, he's heading to Namibia. Can you tell us a bit more of the significance of the Prime Minister's visits?
Hi, Yvonne. So this comes 30 years later after former heads of states have visited Africa, particularly from India. And there are several ways to look at this significance. One of them is that China is the world's largest producer of rare earth minerals. And in the recent past, we've seen them starting to restrict exports for geopolitical leverage. And that leaves players like India looking for alternative markets to source some of these minerals. They're looking for players that don't have the same cards, they don't hold the same influence and power as China. And that makes Africa the next frontier. And it's very significant because if you look at the countries that he chose to visit, Ghana and Namibia, these are countries that hold a lot of weight, particularly when it comes to minerals. Ghana has gold, and he did not leave the country before securing a high-stake deal for critical minerals, including uranium, lithium, and cobalt for the EV industry. The same can be said about Namibia. They're the world's 4th largest producer of uranium oxide. They also have copper, cobalt, zinc, and diamond. And these are not only critical minerals for green energy production. There are also minerals that fetch good prices at the international market, particularly with gold and diamond. But also there were a few sweeteners in that deal, particularly hammering in on the cooperation and the collaboration between India, Namibia, and Ghana. If we look at Ghana, trade between the two countries, $3 billion. It was $4 billion before the COVID-19 pandemic. And he said that he wants to double that in the next 5 years. If we look at Namibia, slightly under $1 billion investment, slightly under $1 billion. But again, there's so much significance to this because there are Indian companies on the African continent, including Airtel. Indian pharmaceutical are big businesses here because they provide affordable generic medication. And so this is just some of the factors that are laying basis for this visit and trying to cement cooperation between the two countries.
Yeah, you got to wonder what are sort of the measures of success in this trip, right? Do you think this visit for Modi can help reposition India in this race for influence in Africa?
Yvonne, to be able to answer that question, we go back to the language that Prime Minister Modi was using during this visit. He says that they're not just travelers. They are also, he says rather, they are just not partners. They're travelers in this journey with African countries like Namibia and Ghana. He also took his time to go back to the deeply rooted history that India shares with these two countries, going all the way back to independence. Indians were one of the first traders and entrepreneurs to come to the African continent. They were doing business along the railway lines in Africa. So the cooperation has always been there, but also they're taking it a notch higher. If you look at the players that are already on the African continent, China, but there have been controversies surrounding the money that comes from China with allegations that they're debt trapping Africa. When you look at the US, the money comes but with conditionalities and lectures. And with President Donald Trump in office, the lectures are guaranteed, the money not so much. So India is saying, look at us. We know you, we understand you, we've been through this journey with you, and we want to work with you. And it's going to be a little bit easier for them in comparison to players like the Middle East, because already there's a perception about India on the African continent that is kind and favorable.
Indira, thank you. Indira Ogongo there, our Bloomberg reporter on the latest when it comes to this trip from Modi in Africa. And for a look at some other stories that we're following for you today, Dangote Industries says it expects Africa's biggest refinery to rely totally on Nigerian crude by the end of the year. Now, that would replace hundreds of thousands of barrels a day of imported oil. The refinery received about half of its crude in June from local producers with the aim of transitioning to 100% by December. The plant processes 550,000 barrels of crude a day, with almost half coming from the U.S. Gambian lawmakers have rejected a new draft constitution. The document would have imposed a two-term presidential limit, but it contained a loophole that would allow President Adama Barrow to run for re-election and potentially extend his rule by a decade. His current term ends in 2027. The West African nation's existing 1997 constitution has no limit on presidential terms. European energy giants BP and Shell have signed deals with Libya's National Oil Corp to study new opportunities in the country's oil and gas sector. They join other oil majors returning to the North African nation. The OPEC member has struggled to quell unrest since the 2011 fall of longtime dictator Muammar Gaddafi. Libya has the biggest known crude reserves in Africa, but is split between rival governments that frequently feud over control of oil resources. All right, take a look when it comes to markets here right now. It's pretty subdued in the equity space here. U.S. futures are slightly to the downside here. Nasdaq's futures are pretty much flat as well. Euro is looking a little bit better in terms of how the European market's going to open up here today. Futures are pointing slightly to the positive side of things. Of course, we're still dealing with what this EU and U.S. sort of trade deal looks like as well, with President Trump coming through with those latest headlines as well. Treasury looking like this here right now. This global bond sell-off seems to be continuing here slightly. Take a look at how the curve is looking like. Long rates is still where that angst is, and where we are continuing to see a slight melt up when it comes to yields once again. So 441 for your U.S. 10-year yield. And coming up, we're going to take a look at oil. OPEC is holding its 9th international seminar, coming just days after announcing a surprise increase in oil production by the wider OPEC Plus group. We are live in Vienna next. This is Horizons Middle East and Africa. Our top stories this morning. President Trump doubles down on his tariff regime, now threatening new levies on imports of pharmaceuticals and copper, sparking turmoil in the metals market. OPEC leaders are set to meet today after that surprise production hike of more than 500,000 barrels a day. We are live in Vienna. And later on in the show, we take a deep dive into the UAE's ambitions in Africa as it expands its influence and power across the continent. It's just gone 8:30 a.m. across the Emirates, 12:30 p.m. here in Hong Kong. I'm Yvonne Man in for Jemana Brzezinski. She's at Vienna. She'll be talking to you what's really in store in this OPEC Plus meeting coming up as well. But certainly in terms of the markets and what we're feeling here today, it's sort of a meh sort of day, given what we've seen with the tariff headlines of late, with President Trump vowing to keep that August 1st deadline intact for tariffs. That hasn't really moved too much when it comes to equities, although we're slightly lower here in Asia. U.S. futures are also slightly to the downside. But then again, you have the likes of Goldman Goldman, Bank of America, in just the last 48 hours, upgrading their year-end targets when it comes to the S&P 500. So people are still leaning, maybe possibly willing to be more bullish still on U.S. stocks. That global bond sell-off continues a little bit here in the Treasury market. We're seeing a 6-day where yields have perked a little bit higher on the long end of the curve. So we're at 441 levels for a U.S. 10-year yield. Keep in mind, we also have a 20-year JGB auction later on Thursday this week as well. And we're focusing on the Kiwi dollar here. So we are seeing a bit of a whiplash there. Initially, we did see a spike and then headed lower. It was a dovish hold from the RBNZ. They said it was a pause, really, in their easing cycle this time around, but they are leaning maybe possibly cutting again later on in the second half. So that is why we're seeing that downside in the Kiwi here, just sub 60 U.S. cents. In terms of what the copper markets are doing, we talked about the turmoil given this threat of 50% tariffs in the copper. So COMEX futures are now actually slightly in the back foot here after we did see that biggest one-day spike in U.S. copper ever, and really briefly touching that all-time high for copper prices. On the flip side, LME actually has been heading south. So you are seeing LME prices there down about 1%. And we are continuing to see that spread widen a bit between the COMEX and LME futures as well. Watching how these copper stocks and miners are doing, slightly to the downside for Sandfire Resources. We're down about 3% in Australia. And the pharmaceutical side of things as well, given the threat of 200% tariffs on the pharma space, we are seeing these pharma stocks fluctuate here in the Asia session as well. Let's get to one of our other top stories here this morning, which is OPEC holding its 9th international seminar in Vienna just days after announcing a surprise increase in oil production by the wider OPEC Plus group. Our Horizons anchor, Jumana Berchetti, joins us now from Vienna, where the seminar is happening. And Jumana, we already talked about the super hike. It seems like that's already taken a lot of the focus in these oil markets. But what's expected today?
Yeah, absolutely, Yvonne. So I'm standing right in front of the Hofburg Palace. You can see it right behind me. That is where the OPEC seminar is set to take place over the next couple of days. We're standing outside. We have asked for accreditation. Despite multiple requests, we have not heard back from them yet. But this is, as you say, an opportunity to hear from some of the biggest industry leaders around the world to take stock, really, of everything that has happened in these oil markets over the last couple of weeks. And remember, it wasn't that long ago that we were talking about geopolitical premium and the possibility of oil moving all the way up to more than $100, $110 on back of that Iran-Israel war. Now that there's a ceasefire there, pretty much all of that geopolitical premium has been unwound. Then last week, we had the announcement out of OPEC Plus that they were putting back even more barrels to the market than had been anticipated. And you look at where oil is trading today, actually seems to have taken everything in its stride. So over here, there are going to be lots of discussions about both the short-term and the long-term dynamics of oil. When I talk about long-term dynamics, I'm talking about some of those bigger themes like energy transition, energy security, energy poverty, especially in some of those emerging market nations, in addition to incorporating technology into energy solutions. And of course, artificial intelligence, AI, is a major theme there. But when it comes to the short-term dynamics, certainly this is going to be an opportunity for us to get a feel for how some of these OPEC ministers, non-OPEC ministers, some of the leading think tanks and analysts around the world are thinking about the dynamics, not least because so much supply seems to be hitting these markets. And as of now, there hasn't been so much of an impact. But I guess the question is that going to change in coming months?
Yeah, it's right. It's quite counterintuitive, the response that we got from oil prices, right? There's a prospect of increased supply, but oil prices actually have been heading lower. More broadly, what is the feeling in the industry overall?
Yeah, I think the feeling from OPEC's perspective when they put out that announcement over the weekend was that the market fundamentals could justify them adding these extra barrels, and namely because we are in the summer season now. Seasonal demand tends to be strong at this time of the year because of refinery usage, because of extra demand, the seasonals in the Gulf countries, air conditioning units, transport demand in the U.S. But all of that is set to start declining in the coming months. And then you could be in a situation where the market is oversupplied. And indeed, many Wall Street analysts are saying that that is what's going to happen. Only this morning, I was reading a note out of RBC. They're predicting that by the fourth quarter of this year, you're going to see 600,000 barrels a day of demand growth versus 2.3 million barrels a day of supply growth, i.e. supply is outpacing demand by 4 times. And that tallies up with some of the commentary that you're getting through from other analysts like Goldman Sachs, Citi, JP Morgan as well. So Wall Street are warning that because of this oversupply, you will start to see prices drift lower, perhaps end up around the $60 mark, some even going as low as the mid-50 mark. So that's one thing to bear in mind. The other thing, of course, is what happens with these demand dynamics based on macro uncertainty, the impact that all these tariffs are going to have on final demand, consumer demand, whether those fiscal packages that have come through from the U.S. in China as well are going to move the needle on demand too, something to watch out for. And then finally, I would say, Yvonne, watch out for U.S. production, because already at this level, what you're seeing is the number of active oil rigs have started decreasing. Shale oil producers have started drilling less. So maybe actually you'll start to see a moderation of supply coming through from U.S. producers in the coming months.
Yeah, the battle for global market share continues there. Johanna Bercecci there joining us in Vienna ahead of that OPEC Plus meeting. Thank you. Joining us now is Ed Bell, Acting Group Head of Research and Chief Economist at Emirates NBD. Ed, what's your take really? I mean, it seems like we already are seeing this faster unwind of OPEC cuts. The market seems to be more focused on the summer demand season right now. Do you think it has the ability to really absorb these extra barrels here without sinking prices?
Well, I think you have to look at it in the context of what OPEC Plus has agreed. If you look at the increases that they have put on paper between May and June, and then what we've got for May to July, and then what's planned for August, and then potentially for September, you could have almost 2.5 million barrels a day of increased supply coming on from the OPEC Plus countries, actually just 8 of those countries. And yet oil markets have been holding up relatively well. What I think that speaks to is that the market is actually a bit more focused on the conditions around the demand side of the market, and that's being much more impacted by these uncertainty around tariff rates from the U.S., what that's going to mean for industrial demand in key emerging markets like China, what it's going to mean for oil consumption in the U.S. itself. And I think as we don't have a clear picture on how that tariff policy, how that uncertainty is going to fall through into the market, oil markets are sort of treading water right now. However, when it becomes clearer what the fundamental picture is going to look like in the, say, autumn to winter months, it's going to be very evident that there is a lot of additional oil on this market, and so prices will have to respond negatively as a reaction.
Right. How do you see that all play out, though, right? After the summer driving season, you're dealing with the macro headwinds, as you mentioned, the possibility of U.S. tariffs, the global economy expected to slow down. You also still has the whole rising shale oil sort of factor in all this as well. So are we looking like the market can really tip into a surplus later on this year now?
Yeah, I think if you look at the cooler demand growth projections for really the second half of 2025 and even extending that into 2026, it looks very evident that a market surplus of a considerable degree is going to be built up in oil markets. Already, we've had a couple of indications from U.S. weekly stock data that you've had these sort of shock stock builds at very large levels. A little bit of a warning sign, I think, that not everything is exactly well in the oil markets as we're here at the end of June, early July. But those numbers are likely to get even worse in terms of inventory builds over the rest of the year. Now, one thing that can play against that is if we look at some of the indicators coming out from U.S. producers, they're growing really downbeat in terms of their outlook for growth and supply additions over the rest of this year. Costs are a big part of their level of unease. Remember, if you're running a drill string in Texas or in parts of the U.S., that's a lot of imported steel that you're going to be needing to use, and all those costs have gotten much, much higher. So there's a lot of uncertainty there, but how much faster U.S. oil production can grow over the rest of 25 and into 26.
And what level of WTI should I assume then that can actually stymie the shale side of things here as well? I mean, at what point, it seems like right now oil production rigs are still turning. At what level? Does it have to be sub $60 for them to actually start really seeing these fields go quiet?
Yeah, I think it really matters how we're seeing prices develop further along in the oil curve because, the near-term prices in the WTI or Brent market, for instance, aren't really the prime driver for a production decision or an investment decision from a producer, an E&P producer in the United States. So they'd be looking much further along the curve. And if we're seeing those prices fall with some considerable downside volatility, if we're getting to, say, 55 or lower than that in the longer end of the WTI curve, then I think that really starts to put the brake on rapid growth from the United States.
Okay, what does this mean for oil prices moving forward? Do you think, this whole strategy for OPEC Plus, are they going to succeed in keeping prices where they are now currently? Or, there's a lot more people in this market, in the industry now, are calling for, $50 oil, for example. Is that a real possibility?
Well, I think the strategy has really been a shift from trying to target a price within OPEC Plus because there's not a single price that was going to satisfy all members of the OPEC Plus alliance. You have enormously varied economies with varying degrees of dependence on oil income for their exports or for their fiscal accounts. So there's not a single oil price that I think was ever going to satisfy OPEC Plus. What we're seeing now is a very evident shift to a strategy of, hey, we are the lowest cost producers in the world. We have the largest ability to increase output. Let's put that into the market now and capture as much market share as possible. So if they're going to go down that road and really ramp up output and essentially bring forward everything that they had planned for 2026 until the next couple of months, then yes, the outlook for oil prices, we believe, is going to be softer. Our expectation is that on average, Brent prices will be about 20% lower in 2025 than they were in 2024.
All right, Ed, thank you. Ed Bell there, Acting Group Head of Research and Chief Economist at Emirates NBD, joining us live from Dubai. Well, coming up, Boeing delivers the most jets in 18 months. We look at what is behind that recovery next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Yvonne Mann in Hong Kong. Well, Boeing delivered 60 aircraft in June, its best showing in 18 months, with 42 of those being 737 MAX models. Now, the numbers reflect factory improvements and the resumption of exports to China. The surge puts Boeing back on even footing with rival Airbus, which delivered 63 jets last month. Now, Boeing had been hit by a series of crises, but momentum has shifted, with Airbus now struggling to hit its production targets. For more, let's bring in Bloomberg's global editorial leader for aviation, Benedict Kamel there. Benedict, break down the numbers further for us a little bit. And the fact that this is coming on the backdrop of a resumption of jet exports to China. How big a role does China play now for Boeing?
Good morning. Yes, China is really important for Boeing, and this has been a sort of on and off relationship for a while. The deliveries to China had been suspended because of the tariff spats between the US and China, and obviously Boeing was sort of caught in the middle of that. Now the deliveries have resumed. As you said, we had 8 aircraft going to China, and that's an important development for the country because really they were locked out of there while Airbus was able to ship its aircraft over there. So 60 aircraft overall, 42 for the 737 MAX. That is their most crucial product, that small plane. That's really what they sell the most of. And that really puts them back into a much more stable sort of tempo. This is coming out of a long phase, more than a year, of having really very difficult production outputs, a very difficult numbers, low overall, just because they'd been in such a state of crisis. Remember, at the beginning of last year, they had that door fly out of their aircraft on the Alaska Airlines aircraft, and that really threw the company into a sense of crisis. They had to drastically bring down their production. Now they're back, and as you say, they've put them back onto sort of equal footing with Airbus. They also reported their numbers yesterday, just a smidge ahead at 63 aircraft, but really neck and neck again, those two aircraft makers.
Yeah, it's so tight here right now. What do these numbers tell us? Does this bring Airbus and Boeing closer to their goals?
Well, they have slightly different goals in terms of where they want to get. Boeing wants to get their monthly production of the 737 to a steady stream of 38 aircraft. That's where they are currently capped by the FAA, by the regulator, following that accident last year. So they want to bring it to stably 38. They are well within that now, but they need to show that they can keep that up, and then they want to gradually move up. So they're on a good path here. For Airbus, they have an annual target of wanting to hand over 820 aircraft for the year. For now, they've only managed about just north of 300. So they're some ways short of that if you consider they're at the halfway point of the year. Normally, though, the production really accelerates towards the end of the year, so they might still make it. But if you just look at it in isolation, half-year point, Airbus is some ways off, whereas Boeing actually looks fairly healthy in terms of reaching their targets.
Well, tell us a bit more about the production targets and really the bottlenecks that are still there.
I mean, this is something that has really bedeviled the industry for years at this point, coming all the way out of COVID, a lot of the production really out of sequence, a lot of people left the industry, a lot of suppliers struggling, and it's something that the industry has really struggled to shake off. We have seen, on the one hand, this weakness on the supplier side. On the other hand, we've seen a real strength in terms of demand. We've seen some really bumper orders from companies like Air India, from Indigo, from other parts of Asia, from Qatar recently when President Trump came to visit. So the demand is there, so the supply side, that's really where the problems exist. Airbus is having trouble, in particular, getting enough engines. They're having trouble getting things like toilets for the large aircraft. So it's really all over the place, large parts, small parts. And remember, these aircraft have millions of parts, literally, that go into them. So if you have something missing, that easily creates a bottleneck. And that's something that both companies are still working through.
All right, still some strains there. Benedict, thanks so much. Benedict Kama there, Bloomberg's global editorial leader for aviation, joining us live from Berlin this morning. Thank you. Now for a look at some other stories that we're following for you today. Bloomberg has learned that SpaceX is discussing plans to raise money and sell insider shares in a deal that would value it at around $400 billion. That would mark the largest ever valuation for a privately held U.S. firm. And sources say the valuation reflects the rise of its Starlink satellite internet unit and the company's ability to achieve new milestones with its Starship rocket program. Bloomberg has learned that Meta has bought a minority stake in the world's largest eyewear maker, EssilorLuxottica. The 3% stake, worth around 3 billion euros, comes as the U.S. tech giant increases its financial commitment to the fast-growing smart glasses industry. CEO Mark Zuckerberg's commitment to AI has become a top priority and major expense for the company. Well, coming up, the UAE has pledged billions of dollars for investments in Africa. We'll discuss the Gulf nation's efforts to expand its influence on the continent next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Yvonne Mann in Hong Kong. Well, in recent years, the UAE has been at the vanguard of Gulf states building influence in Africa by pledging billions of dollars in investments. In March, the Gulf nations signed an economic partnership agreement with the Central African Republic in a bid to boost trade and investment between the two countries. For more, let's bring in Bloomberg's Simon Marks. And Simon, it's a fascinating piece about the potential and this partnership that we're seeing here. Tell us a bit more about what the objective is. Why has the UAE focused so heavily on Africa?
Well, the United Arab Emirates for the last decade, roughly now, has really focused on Africa, mainly because it's a huge frontier market. There's huge potential for it. There's huge amounts of land, arable land, that can solve some of its food security issues. And also, sectors like energy, climate, that poured a huge amount of money into minerals in places like the DRC. And I think it's a bit of a testing ground also for their foreign policy ambitions in general. Africa, it's a fast-growing continent. The population's booming. And I think just with all their cash, as the UAE, looks to shift away from oil as its main source of income, it's looking to Africa to sort of embed itself in these new sectors and transition its economy, more or less.
And what is the sort of strategy here? What are some of the tactics that they're undergoing here in terms of gaining influence and power? And has there been any fallout?
Yeah, so I mean, they have the big question around them doing this is their role in supporting, allegedly, non-state actors. We've seen them in Libya. Diplomats in the UN say they've supported one faction in that war-torn country, and also in Sudan, where they've allegedly backed the rapid support forces. Is something that the Emirates strongly denies. They say they're there for humanitarian reasons only. But what we've seen is that they tend to go in, they put down field hospitals, they might invest in airstrips to sort of create this logistical network in Africa that allows them to shift goods, some legitimate, some allegedly not, in the form of supplies to these non-state actors or various militias that they back in Africa. And so the allegation is that while looking to invest and improve things, they're also fueling unrest and conflict. And I think that's the crux of the debate now, and where a lot of the diplomacy internationally is going vis-a-vis the Emirati role in Africa.
Yeah, so there's a bit of fallout there. But can you tell us about what this means then, in basically the relations between the UAE and Africa moving forward then?
Yeah, so I mean, we've seen now, if you take Sudan really as the sort of centerpiece almost of the controversy at the moment with their support to the RSF. If you look around Sudan in places like Central African Republic, in Chad, in Kenya, Uganda, all these countries orbiting Sudan, they've really focused on creating good relations with those governments, making investments, making economic pacts as a way of sort of breeding political support for their wider goals, which many sources say is to make sure the RSF gets a strategic foothold inside the country. Sudan is key for them, basically, because it's on the Red Sea. It's got a massive coastline where there is, as of yet, to be a main winner in some ways. And there's a massive gold trade between Sudan and the Emiratis, which is ongoing. So it is a strategic country for them.
Yeah.
Yeah, Simon, they continue to deny, obviously, their role.
We got to leave it there, though. Simon, thank you so much for your reporting. Simon Marks there. Thank you.